If you want to be more profitable with trading, especially with day trading or leverage trading, you are going to want to watch this video. I'm going to give you some simple steps that if you follow this, you are probably going to dramatically see an improvement in your overall results. And I'm also going to walk you through an exact breakdown of a trade that works according to this concept that you can take over and over and over again with a very high probability, good risk reward setups. Now, before we get into that, number one, if you are not subscribed to this channel yet, subscribe down below and click the notification bell. That way you can get those future updates. Point number two is if you enjoy these tutorials and these breakdowns and it does help you with your trading and you don't yet have a Bybit trading account yet, use the link in my description down below to create a Bybit account. You'll get the best bonuses. There's up to $30,000 deposit bonus, and if you sign up through my link every month, I'm holding a trading competition, which is free to enter for all my referrals. And there's thousands of dollars for prizes up and grabs there. So if you do want to trade, you don't have a Bybit account yet, use the link in my description down below. So look, it's no secret that over 90% of retail traders fail, whether it's stocks, whether it's Forex, whether it's day trading, options, whatever the case is. The majority of participants, and we're talking about the vast majority, 80, 90, 95% of people who do this fail. And it is because it is probably one of the most difficult things, although the concept is actually very simple. And the reason why most people fail is because they don't stick to the simple concepts, and basically most people sabotage themselves. That is it. It is actually very simple to trade and to have a system that allows you to be profitable with it. The only thing is you have to stop yourself from sabotaging yourself. And what I mean by that is the following. The first key about trading is risk management. So if you have a trading account, your risk management, in my opinion, should be you should only risk a maximum of 1% of your trading account on a single trade. Most people fail because they can't even stick to this point. So if you have a $10,000 trading account, it means you should not be risking more than $100 on a single trade, because that way you can be wrong 5 times, 10 times, 20 times in a row, still have plenty of capital left to be able to survive. Most people fail because they maybe stick to that initially, or 2 or 3 or 4 losses, then they get tilted, they slide up the leverage bar, and they risk 30% or 50% or the whole account on one single trade. They lose it all, and that is why it happens. And some people can continue to trade, they're diligent, they're consistent, but all it takes is that one slip up. Even if you do everything right for 3 months or 6 months or 12 months, and you're very disciplined, if you slip up that one time, and you don't stick to that rule and you risk 30 or 50 or 100% of your account, one trade can wipe you out. That is the most important rule. Stick to that, and your chances of becoming a profitable trader or a successful trader in the long term increase dramatically already. The second step of becoming a profitable trader in the long term is you need obviously a strategy that is simple, repeatable, and it needs to give you a higher risk reward. So you can either do one thing where you're looking for one-to-one risk reward, but then you need to know that your system has an accuracy rate of greater than 50%. Otherwise, you're just going to lose. But the easiest way to do things is to look for bigger rewards when you're right and smaller losses when you're wrong. So we're looking for 1% risk when wrong, but we're looking for a 3x or a 4x or a 5x, 5%, 5R, whatever you want to call it, when you're right. Because let's just say you have a 1 to 3 risk reward, meaning when you're wrong you lose 1%, when you're right you make 3%. This way you can still be wrong 50% of your trade setups and still be profitable, because when you're right you're making 3 times the amount of when you're wrong and you lose. Okay, so that is the second component. And the third thing is quite simply emotions and discipline. So if you can stick to the first rule of 1%, that is already great. What you also need to stick to is sticking to only trading your system or your setups. Avoid trading for the sake of trading. Avoid trading because you're bored. Avoid trading because you feel you need to be in a trade all the time. Avoid trading because you feel on top of the world and you just made a few good trades and you just want to continue winning. Avoid all of that. That is the key. And those are the biggest issues that prevent you from, or that prevent most people from becoming profitable traders. And if you can just focus on that, if you can master that discipline, if you can stick to the 1% max loss per trade, if you can find a system or create a system that's simple and repeatable that gives you 1 to 2 or 1 to 3 risk reward and better. And then number 3, if you can focus on yourself and make sure that you are not affected by your own emotions and that you have the discipline to stick to your system and your risk management, that is all that it takes to be able to be a profitable trader in the long run. So now let me break down my most favorite trading strategy and probably the easiest and most profitable one. I've already made a tutorial about this. It is called trading the ranges. So if you haven't seen that original tutorial, I'll link to it up here or in the description below. Go and check that out. But what I'm about to show you right now is that exact strategy, and it works over and over again, whether we're talking on low time frames where you can trade with leverage, the 5 minutes, the 15, the 1 hourly chart, okay? You can trade that with leverage, or whether we're talking about 4 hourly or daily, you know, it can happen there too. And you can trade that with spot if you're trading bigger sizes. So this works for all types of time frames, leverage and spot, but it is just a very simple, repeatable and profitable strategy. And in my opinion, if you were to focus on just this single strategy, don't trade any type of other setup, only this range strategy, and you have the discipline to stick to those rules, I think it's a winning strategy. So let me break it down for you. Okay, so this is a range trading strategy where we are looking to either short a deviation above the range or long a deviation below the range. Deviation or a sweep, meaning it just wicks above or below and comes back into the range. Okay, so I posted this on Twitter, so just to show you that this actually was called in advance. It's not just some hindsight analysis in theory. I literally said this in advance. It's posted on my Twitter. Okay, so I posted over here while the price was here. We have the range. Okay, you can see the range low, range high. Once we have that, we are looking for either a sweep of the low to long or a sweep of the high to short, whichever one comes first. And you can see we don't trade within the range because that's where most people get chopped up. So you don't want to be trading within this range. You want to be looking, you set alerts at the extremes of the range. And here we got that sweep of the high. You can see it wicked above it a couple times over here on the 4 hourly chart, pulled back into the range. That is what we want to see, because if it's a proper breakout, it's not going to pull back into the range. It just keeps going. So we want to see that sweep and then a pull back into the range. Okay, so we got the wick here above the high, it dropped back into the range. So if you were looking on the lower time frames, the 15 minutes, the 5 minutes, the 1 minute, you could have potentially already taken a short at this point. But since it pulled back in here, what we often do get is retests of the range high over here. So once it's in here, if we missed the initial drop back into the range, the initial position, we simply wait for a re-entry point near the range high or the range high with a stop above that previous wick. Okay, and the target would then be the bottom of the range, the lows over here. So this obviously works in the inverse too. In this specific example, it's a short, but if it would have gone below first, then we would have targeted the top of the range. Same rules, we wait for a sweep below, back into the range, and then we can take a long with a stop below that wick. Okay, so this is the setup. It is very, very simple. And you can see this is exactly how it ended up playing out. So we got that retest of the range high. It got a little bit back above it. Okay, so you got the entry there on the retest. The stop goes just above this wick high, just to be sure. So that gives you a nice setup over here with the target of the range lows. And even though it didn't go straight down, which sometimes happen, we got a second test of the range high over here. But you can see it never went back above this previous wick, so the stop was good. And if we would have gotten stopped, if it would have gone up here, would have lost 1% of the trading account. But the target here ended up getting hit. You can see perfectly over here, a little wick below it. That's all it needs, because anyone who had stops here at these lows, they got taken out on that wick. So the target here was, I think, about 3%. It depends on your entry. Obviously, the closer you get to the range high, it still stays that 1% risk, but your reward becomes much bigger because the distance between your entry and your stop becomes closer. So ideally, the closer you get your entry to the range high and to the point of invalidation, which is the stop, the better risk reward you can have. So I think this was about a 1 to 3, but if you get a better entry, it can easily become a 1 to 4 or 1 to 5 risk reward. So that means even if you get stopped out the first time or the second time or whatever the case is, if you're doing a 4R, you can get stopped 3 out of 4 times every time you try the setup and still be profitable in the long run. So going back to the Ethereum chart over here, you can see how perfectly this actually plays out and how these ranges work so well. So you want to use just simply the parallel channel tool over here. You can draw a mid-range 50%, which is the dotted lines. You can just customize it like that. Very easy. And then you have your range low to range high over here. And we're looking for a sweep either below or above. At this point, we don't know which sweep is going to come first. So we're open to that. We set an alert near the top over here. Very easy. We set an alert over here. We don't want to be trading in the middle. That's where you get chopped up. That's where most people lose their money. They make good money on the trend. Maybe they long it and then they try and long short and then just get chopped up over here. Just avoid that. Very simple, as you can see. And the rule is we wait for the sweep. So we get the sweep, we drop back into the range. Okay, then we're looking for a retest of the high. So over here, maybe the first time if you did this and you shorted over here with stop above that high, you would have gotten stopped out. But then we see this, we get this wick here and it drops back into the range. So that gives us another chance. So sometimes you get stopped out. Okay, that is not a problem. It is part of trading. It is to be expected. You cannot trade without taking losses. But the key is you limit your loss to 1% of that trading account, and then it's no big deal because you know if your setup works, you're making 3 or 4 or 5% when you are right. So if you get stopped out the first time, you can take it again the second time, obviously if it's based on the system, right? It drops back into the range and then we get this setup over here. So even if this was technically the second time that you take it, this time it worked out. You can see 1 to 3.3. So even if we took 1 hour loss on the first time, the second time we make 3.3. So we're still at a plus 2.3 R, 2.3%. So this just works over and over. This is obviously on an hourly chart. And you can see it took about a week over here for this range to form and then another 2 to 3 weeks for this to play out. So obviously the higher the time frame it is, the longer it takes to play out, which depends on the kind of trader that you want to be. If you're trading this with spot, for example, and you don't want to trade with leverage, you can absolutely do that. So it's more of a swing trade and you can hold that for multiple days or multiple weeks. It absolutely works like that. If you want to go on lower time frames, you can go into the 15-minute, the 5-minute, the 1-minute charts. These ranges also play out in that way. Obviously, they just play out a lot faster. The distances moved are smaller, but then is better for day traders, scalpers, and if you're using leverage. So there's all sorts of possibilities there. So obviously, quick disclaimer, this is obviously risky if you don't know what you're doing. If you know what you're doing, like I'm breaking it down for you, you want to put in that practice first, okay? Don't start by risking real money. Don't start by risking big money. You want to practice first and understand these setups and see if you can do it in real time. Create a journal, a simple Excel spreadsheet, and get 20, 30, 40 trades under your belt, right? Just practice it, record the setups, with the before and after with your targets and see how you do. And if you can repeat the setup and over 20, 30, 40 trades, you can see that you are profitable, well, then you can maybe start trying it with real money, right? And then you can start risking 1% of your trading account per trade. But again, if you can't be profitable on paper and you can't be profitable with small amounts, we're talking about, maybe you want to deposit $1,000 and risk $10 per trade. If you can't be profitable with $10 per trade, the setup is what matters, not the amount of money. Okay, so you have to get profitable at the setups. You have to be able to be consistent. If you think that putting in the work to document 20 trades before risking any real money, if you're not able to do that or you don't have the discipline or the consistency to do that, it's unlikely that you are going to be able to do it with real money. So look, this is not some overnight get rich quick type of thing. You have to put in the work, you have to put in the effort. But what I've just shown you, the 3 rules that I've broken down for you and the setup, if you only stick to trading ranges, whether it be long or short, whether it be spot or with leverage, and you follow this, you'll have much better results than the majority of people who just attempt to trade with no idea of what they're doing. It's simple, just stick to one setup, simple, repeatable, over and over, good risk to reward, journal it first, and then once you have those results for yourself, you can start to try it with real money. And then obviously as you're more profitable and you start winning, you can start to gradually increase your account size, but still sticking to 1% risk per trade. Because keep in mind, no matter how good of a trader you are, no matter how much experience you have, you will have losses. And if you do not manage those losses, it doesn't matter, because then at some point, if you risk your whole account, you're going to blow your account. It's just a matter of time. So the discipline is important, the risk management is important, the risk reward, and then just the consistency to do that. So if you enjoyed this video, remember to subscribe down below, smash the like button, share this video on social media, send it to someone if you think they can benefit from it. And if you're not yet trading on Bybit Exchange, it's what I personally use for my trading, use my link in the description down below. You can get up to $30,000 in bonuses, and you'll get to participate in my own trading competitions, which I hold every month, with up to thousands of dollars in prizes. So thanks for watching. Happy trading. Put in that discipline, put in that practice, keep journaling, and I wish you good.